case. That was a violation and caused that potential liability because a $22 courier fee and the Florida intangible tax were not included in the finance charge that was disclosed to the consumer. So that's a $122 item right there that a consumer probably wouldn't have known had they looked at that, that it was missing or that it needed to be there in that amount in that box.
Hi, welcome to Worth Quoting, FCCJ's Public Service Program. I'm Dawn Lockhart, Consumer Credit Counseling Service Program Director, and I'm here with Cynthia Goodwin of the Federal Reserve Bank. And you've got a busy day today, going out and talking with everybody about the issues from the Federal Reserve Bank. Tell me a little bit, first of all, what's your background and what interests you in getting into this business?
Okay, I've been with the Federal Reserve Bank for 16 years. Some of that spent as an examiner, actually going into financial institutions, verifying their financial soundness as well as their compliance with banking laws and regulations.
I bet you were a popular visitor, huh?
Well, we're hoping that we were welcomed by the institutions. Our goal is to help ensure financial stability, which is also an objective of theirs. I have been in the consumer affairs area. That's the area that enforces the consumer protection laws for the last 4 years as Assistant Vice President. Previous to that, I was the Community Affairs Officer, and the primary objective of that area is to enforce the Community Reinvestment Act by educating banks on public-private partnerships and other initiatives that they can engage in to meet the needs in low and moderate income areas.
As a consumer, I would know what the Community Reinvestment Act is and what it can do for me. And the Federal Reserve Bank obviously is really impressed with trying to get that out into the community, but most consumers don't know what that means to them. And here in Jacksonville alone, there are a tremendous number of programs that were developed because of the requirements of the Community Reinvestment Act. I know within our program itself, we counsel a lot of families as a result of the Community Reinvestment Act funding from different creditors. What does that mean to a consumer, and what can the consumer do to know a little bit more about the programs available to them?
Well, the Community Reinvestment Act requires financial institutions to help meet the credit needs in the communities that they're chartered to serve. They're chartered to serve specific areas, and they're obligated to affirmatively seek out what those credit needs are, and to the extent possible, given their expertise in business strategy, develop products and services that meet those needs. There have been several programs initiated both on the federal, state, and local levels to offer funding that can be joined with bank financing to offer borrowers a more affordable rate, particularly in the affordable housing area. And the state of Florida has several programs that assist in that regard.
Most of the programs that I know we're involved with do pertain to affordable mortgage loans. Are there any other products other than that a consumer would be interested in?
Most do, again, are centered on affordable housing, and I believe that was the result of the Home Mortgage Disclosure Act, because there was data to support what kind of activity was going on.
Such as what type of data?
The Home Mortgage Disclosure Act records where home mortgage loans and home improvement loans have been originated by borrowers, so that we know by census tract and borrower income and other statistics where exactly that lender is lending. And that's data that is available to consumers. You can get that at the head office of the institution, and there are repositories in every metropolitan statistical area so that you can see where your bank is lending. The Federal Reserve also has publications that could direct your search and isolate for you areas that you may want to look at.
Has the growth of the Community Reinvestment Act nationwide increased the number of individuals who are into new homes?
Yes, it has tremendously. I believe the 1995 results showed the highest level of home ownership, particularly by minorities, that we have ever seen. And there was also an inching up in the national home ownership rate, I believe from about 63% to about 65%. And while that doesn't sound necessarily like a significant jump, it does represent over 2 million homeowners. So yes, it has contributed, I think, substantially. The favorable interest rate environment also contributes in that regard.
Yes, that certainly is an issue. And of course, you have more and more consumers, although not terribly sophisticated in the area of money management, are certainly becoming more so with the emphasis on education that the lenders provide, especially because of the requirements of the Community Reinvestment Act. I know here in Jacksonville, many families have benefited from that, and we are very fortunate that we provide a lot of counseling to families because of the requirements provided to the lenders to provide these programs. And the homeownership programs obviously impact stabilization in the economy, stabilization within an own family, and of course that stabilizes the family's financial structure, which then hopefully prevents family problems. So it really has a long-term impact, not just economically on the community, but on the individual family. So obviously that's a real growth factor that we're really excited for, and I think that that's something great that we can promote. What's new right now in consumer protection? What is piquing the interest of the industry, and what are consumers picking up on that can be of benefit to them?
Well, the Community Reinvestment Act that we've been talking about has been very prominent, or I guess primarily because it was recently changed. Those rules will go into effect, too, for the largest institutions this year in July, and the test has been changed such that it's not directed at their process of gathering the information, and it's more toward their results. So there are new
Outcome
tests.
evaluation.
Exactly.
I hear that all the time. It's important.
On their lending, investment, and services. So it's a little more objective, and I think the consumer will be provided with much greater information in the public document that is available to consumers at the headquarters of any financial institution.
It sounds as if the process has changed from, rather than it being directed to be the same for every community, you're now allowing the community lender to decide what will work best within their environment.
Well, that really has always been the case. It's just the way we're measuring their performance that has really changed. And if I could, too, on some of the other educational initiatives, the Federal Reserve in particular enforces 17 consumer protection laws, including the Community Reinvestment Act. And you had asked others that were fairly visible now. The one that probably is most frequently violated because it's so complex and that affects most consumers is the Truth in Lending Act. It's very broad as well in its coverage. Not only banks are subjected to that provision, and that's in determining, or has as its purpose, determining the cost of credit, ensuring that consumers get adequate disclosures on the cost of any money that they're borrowing. That has been changed recently. Well, actually, over the last few years, it's been changed quite frequently. Most significant changes, though, resulted from a lawsuit that originated in Florida, Rodash versus AIB Mortgage Company, and that did cause several changes in the way that's disclosed and the tolerances for error, such that the liability of the lender has been changed from about a $10 tolerance level of error to about $100, and that was because in the Rodash case, it subjected or caused potential liability for insurers in the billions of dollars because those transactions can be rescinded for errors in the disclosures, and that was what happened in the Rodash case.
As a consumer going out to apply for credit, what does the Truth in Lending law do for me? When I'm applying for my loan, whether it be a mortgage loan or a credit card or an installment loan, where in the application does the provisions of the Truth in Lending law stand out?
Those, for the most part, that most people would be familiar with would be in the disclosure that shows you how many payments you will have, of what amount, and the term of the loan. And there's usually what we call the Fed box at the top of the page that discloses those items and gives you the annual percentage rate, which is your cost of credit. That is different from the interest rate because it factors in other costs that the consumer must bear. And that's the tool that we suggest consumers shop by when they are searching for credit.
We find a lot of consumers who really don't take advantage of that information. You know, it's presented to them, they are told how much it's going to cost, and we consider it buying a product. They're buying money, but they tend not to pay attention to that. And I know that there have been a lot of publications out. We have a lot of your materials in our library trying to encourage individuals and families to understand how that impacts them. Is there going to be anything done on any of the applications themselves, the wording changes, or maybe a little bit more of a verbal explanation on the application itself that the consumer might pay attention to more?
Well, that's actually been one of the criticisms. If you have ever purchased a home, you might recall that you get
small print,
an inch
yes,
thick of disclosure statements, and that has been a concern. But because of the litigation, it has become necessary to provide all of that information. And at some times for the consumer, I'm sure it's necessary to go back and refer to some of those terms. But the Consumer Leasing Act, which is also a subset of the Truth in Lending Act, is an area that we will be providing additional consumer education on. We expect to deliver that possibly in October of this year. That has been of great concern because there's not much understanding about the leasing terms and whether it's more advantageous to borrow or lease, particularly an automobile.
We get that question all the time.
We have simplified those disclosures.
What does that mean?
Disclosing the cost of that transaction. It's not necessarily a cost of credit, but there is a credit factor in determining what your lease payment will be, and that's what we're attempting to simplify now, and have changed the disclosures for consumer leasing so that they are more understandable and have removed the obligation of the advertiser. You might be familiar with the small print that's usually on a screen when you see a leasing advertisement. Well, now they're able to provide an 800 number so that you can call and really understand what exactly your obligations are under a lease. And our educational initiative will hopefully assist in that regard.
I know that we often are involved in education programs where we may have several dealerships who are strongly encouraging leasing as opposed to buying, and a lot of consumers are not very well educated at all in that area, and it can be very, very complicated, and we see so many individuals who go into such bad leases due to lack of education. So that type of advancement in education is critical to people's ongoing ability to manage their money. A car obviously is a major source of expense in their budget. In fact, we see an average of about 15% of a family's budget is dedicated to their car payment. That's quite a big chunk.
It is, and it has been increasing. I believe currently about 30% of automobile acquisition is through a lease, and about 70% in the luxury car market. And I believe, and it's probably the way it's advertised as well, people focus too much on the payment and forget all of the other contractual obligations. And that's what we want to encourage, understanding of those terms and full review of those terms before entering into a contract.
Well, all this education is just so critical because again, the clientele that come in who have such serious financial problems usually have those problems because they didn't do the advanced homework to try and figure out how much they can afford, not what they can qualify for, which is very different.
Yes.
You know, what I choose to afford is very different from what you choose to afford. And of course, with the lease presented to you, you can afford much more of a car than what you may actually need. And although there's nothing wrong with that as long as it fits within your financial plan, but most people don't have that. So I think that consumer education is really important. What about in some of the other areas that may impact a consumer unrelated to credit? Is there any other regulation that is occurring right now that a consumer may need to know about?
Yes, and all of the ones that we enforce too are not originated by the Federal Reserve Bank. We have rule writing authority for certain regulations. Others we administer and apply to financial institutions that we supervise, but the actual rule writing is by another agency. And there has been some action in some of those. One that's very significant, the Fair Credit Reporting Act, was changed quite significantly in September of '96. And those rules have not gone in force yet, but they will in, I believe, October of this year. And they do assert quite a few additional rights for consumers, particularly in ensuring that their credit reports are accurate. They also have greater rights with regard to whether their credit report is used when they are applying for employment. And there are more safeguards and punitive sanctions against credit reporting agencies when they don't clear a consumer's file when they have shown them that their information is inaccurate.
Credit reports is such an issue, and consumers truly don't understand how the credit reporting industry works. And it's amazing the number of times I can go out in the community and teach a class and consumers not recognize that their credit report contains a lot more information other than just their financial history. What kinds of information are you, through the Fair Credit Reporting Act, regulating that goes on the credit record? Well,
the Federal Trade Commission has that primary responsibility, but the credit report contains just about a lot of information about you, judgments, liens, your employment status, your salary, and how you have paid, and it is very important in all aspects of your life. Again, it's used by employers, particularly if you have a position or applying for a position that has you dealing with money or some other fiduciary responsibility. They do check your credit, and if you haven't handled your money properly, it could be a negative for you. When you apply for a loan, your credit report is pulled to see whether or not you have the willingness and ability to repay. And that is very critical in underwriting, and also we use that for our analysis under the Equal Credit Opportunity Act, which is another regulation that the Federal Reserve has rule writing authority for, and that applies broadly across other financial institutions, not only those that we supervise. And the credit report is the basis actually for a lot of the lending decisions.
I know that through the Equal Credit Opportunity Act there's been a lot of growth in assuring individuals who have not in the past had access to credit. I see, though, right now a lot more women who are having difficulty getting credit. Tell us a little bit about the Equal Credit Opportunity Act and what an individual who may have had problems in the past need to know about that, so that when they are presented with a situation where they feel like they've been discriminated against, what their steps can be.
The Federal Reserve also has responsibilities for processing consumer complaints. That is done on a jurisdictional basis, with the Federal Reserve having responsibility for state member banks. Those are state chartered banks that have chosen to be members of the Federal Reserve System. There are 3 other federal regulators, and they have responsibilities for the institutions that they supervise, and they also respond to consumer complaints. But when you file an allegation of discrimination, we do an investigation that may include a statistical analysis, interviews of personnel, and a look at their records to determine whether or not there is merit in your argument. And we are obligated under specific time frames within which we have to discharge that duty. We do get some of those complaints. We don't get a substantial number, but we also do a fair lending analysis on all of our examinations of our state member banks.
Of the laws, the acts that we have just discussed, Which one do you find is the most frequently violated?
The Truth in Lending Act, and that's primarily, I guess, because it's so complex, has a lot of details, requires a lot of itemization and calculations in those disclosures. And although it's been around since 1968 when most of the consumer protection legislation was enacted, it continues to be the one rule that is violated most frequently, but it also probably has been one that has been changed most frequently, so it's difficult possibly to stay abreast of what the current rules are.
How does a consumer know that there's been a violation in that? They read the material, they try to do the best they can to verify the calculations, although they are complicated. Are there any key signs that they can pay attention to? Or would it be best if they have some questions to possibly ask second opinion, maybe go and seek advice from somebody to review it? How does somebody know that there's been a violation?
It is difficult, I would imagine, for a layperson to understand that. Just as a point of reference, in the Rodash case, that was a violation and caused that potential liability because a $22 courier fee and the Florida intangible tax were not included in the finance charge that was disclosed to the consumer. So that's a $122 item right there that a consumer probably wouldn't have known had they looked at that, that it was missing or that it needed to be there in that amount in that box. And that was the basis of the lawsuit because it was improperly disclosed. Other than a simple calculation or knowing how to calculate your annual percentage rate, it probably would be somewhat difficult for...
And calculating annual percentage rates is complicated even for the educated person.
Yes, it is.
So that's difficult. I guess from my perspective, what we would find that we would need to do would be just to make sure and provide continuous education to the consumer to educate them on how to understand that. You know, we have a resource library. Federal Reserve is now starting to really focus on community education. What is your role in that, and what can consumers expect to see within their own community in relations to educational opportunities?
We have begun an outreach program, and the areas that we have been emphasizing recently have been in mutual fund sales and the risks and responsibilities in mutual funds, the Truth in Lending Act, and the Consumer Leasing Act. Those are the areas that we have been focused on primarily. We are working with some other agencies to possibly get financing education into the high schools to better educate consumers so that they are better participants in the payment system. And also our examination is the offset to that, where we're hoping that we can ensure the types of internal controls and policies in institutions so that they don't violate the law.
So the trick is we need to find a way to get consumers interested and aware that these are issues they need to be concerned about, that it does impact their bottom line. Do you have any last-minute advice in reference to banking regulations that may impact consumers? Anything that they need to pay attention to personally that they can benefit from?
Read the disclosures that you're given, understand the contracts that you sign. If you don't, seek out counsel before you sign those. There is a rescission period for transactions involving your home. When your primary residence is the security, you have a 3-day rescission period where you can back out of the deal, but that's not common for other types of credit. But basically read your disclosures, and the Federal Reserve is also a resource. While we provide advisory services to financial institutions, that's also available to the public. So if you have concerns about the rules, we are definitely there as a resource to answer those questions for consumers as well as financial institutions.
And how can they find out about that information? Is there a phone number? Is there an address that they can mail their requests to?
There are 12 Federal Reserve banks throughout the country. Ours, being the Federal Reserve Bank of Atlanta, has a district that includes all or parts of 6 states, those being Florida, Georgia, Alabama, Eastern Tennessee, Southern Louisiana, and Southern Mississippi. And we can be reached in Atlanta at area code 404-589-6955. 7200, and we'd be glad to have those calls. But I should also mention too that 70 to 80% of the calls that we do receive are not on transactions that are regulated by the Federal Reserve. So our influence is limited in some regard, but we will do what we can to assist consumers. And we do have some other authorities under the Unfair and Deceptive Acts and Practices laws to look at some of those practices that we might not directly regulate, but that we could possibly be assisting consumers on some of those.
So the bottom line is we need to get educated. We need to pay attention to everything that's happening out there and be aware financially of where we want to go and who's out there that can help us, and to take advantage of the laws that are regulated by the Federal Reserve so that we as consumers can financially get ahead and be responsible consumers.
Yes, and we seek the public comment on all of the proposals that we are responsible, all the rules that we're responsible for writing, and those are very beneficial, and I would like to encourage everyone to take advantage of that right and make your position known when those are being solicited.
Well, we have a lot of your materials in our office, and would certainly encourage anybody who's interested to come and get copies of those. We have copies of all the laws. We'd be happy to pass that out. Thank you so much, Cynthia. I hope you have a good visit here in Jacksonville and learn a lot about our great city.
Thank you.
I'm Dawn Lockhart here with FCCJ's Worth Quoting. Thank you for joining us.